What's up, y'all? This your boy E White. How y'all doing today? So, we're going to talk about how investing and trading are similar to dating. So, here's the reason why. We date to really find out how compatible we are with the person. Do we see a future with them? But also, too, there could be some toxic things on the back end that we are connected to someone based off some unresolved pain, emotions, or traumas that we had in our earlier years. And we have just unconsciously went back into society and found someone to help us relive whatever it is we haven't healed from. So you see a lot of recycling. A lot of you guys are marrying or dating, your fathers, your mothers all over again, and you recreating the same household dynamics. So that's another story to get deep on that on the personal development side. But what I'm trying to show you is that, a lot of times people use the excuse of, I'm really trying to learn before I get started. And what happens is it becomes paralysis by analysis. It becomes self-sabotage that's disguised as perfectionism. I have to know everything before I get started. And you're like, hey, why you haven't started yet? Hey, I'm still learning. I don't feel comfortable yet. It's going to be the same deal when people say, nah, I'm trying to go find myself before I get out to the dating world. I get a portion of that, but you're never really going to truly understand how to interact with humans if we never do the interaction. You can interact with yourself all day, but what happened is you don't have real social skill sets to be able to translate that over. Okay, when someone does something that you may not agree of, or like, how do you really work through it because you've just been doing it by yourself? So you get what I'm saying? So self-awareness is important. And once you go through the self-awareness aspect of things, then you'll be able to, then when you go into the market, you can notice that, okay, listen, I have a tendencies of impulses. You know that. That's self-awareness. You can be honest. You're like, I have a tendency of being impatient. Like, if it ain't moving, I don't like it. That's good. Because in trading, you're probably better to be a day trader. You're impatient. So guess what? You're going to be in and out. It's going to be certain things that you're going to be able to do. That's for you. I don't like day trading. I can do it, but it's not my personality. So when I first started out, I tried day trading, swing trading, position trading. All right, and then I did penny stocks or OTC stocks. I did blue chips. I did mid caps. And of course the penny stocks fall into the small caps. I did options trading. I tried futures trading. I did forex trading, and then I just did regular buy and hold positions, long-term investing. So I tried all those things. That's dating. I dated all of those. You call them females, and if you're a female watching it, you call them males, or male on male, female, female, whatever the case may be. So you're dating. If you're the type of person that likes to dibble and dabble in everything, then maybe you can be one of those ones that you like forex, stocks, options. You doing everything. You just all over the place. Go ahead. Why? Because we got people who serial dated. You got people who want to have flings, who want to do all that stuff. Perfect. That's what you want to do. Then do that. That's for your personality, but it ain't for me. All right. I like to settle down. All right. I like to be with one person. Right. So if I can be with that one person and we can build something solid, build some wealth together, things like that, that's fine. So what I'm saying is that for me, investing became that. So once I understood my style, I got married to that. I'm married to investing, okay? And then we can produce beautiful children, which could be what? The assets that fall within your category, all right? I have a beautiful child in semiconductors. I got a beautiful child in blue chip crypto projects. I got a beautiful, child, in cloud storage, stocks and stuff like that. So those stocks become like children, right? They're building your legacy. So that's how you guys see it. And it could be a bad example, but I'm just trying to give you guys another way of looking at it. Sometimes, a lot of times financial educators come on and it can be too technical, and it can be a turnoff. So I really just trying to bring it to some everyday situations of what we go through. Guys, get out and date, meaning try some stuff out. Stop sitting on the sideline trying to analyze everything from your mind. You got to get out in the world. You got to do some stuff, man. Like, go take some L's, get some wins, see what feels good, what resonate, because you learn and invest in trading. Every profit ain't good profit. What does that mean? So yesterday, I got a trade plan. In my trade plan, I'm not supposed to really trade on Fridays, and I'm not supposed to ever trade on what we call a non-farms payroll. All right, that's a report that comes out, and it basically calculates how many jobs was created in the last month. Okay, and the reason why it's called non-farms because it's excluding farm workers because they mainly are seasonal. So you don't want to add them into your job reports, because it's too many seasons in and out, and which means that it's a high turnover rate of being employed and unemployed based off of farm seasons. All right, now I took a trade. My strike one was I'm not supposed to trade on Friday. I opened the trade up. I looked at the U.S. dollar, Canadian dollar, and I saw that I looked and I was like, it looked like a bearish move was setting up. Let me go ahead and go short, which I did. And then all of a sudden I looked up and I saw that, oh, snap. The non-farms payroll is about to come out. Reason why we don't want to trade during the non-farms to have an open position is because it can be too volatile, meaning that it can whipsaw, it can move, price can just move so drastically, like you can get knocked out of your trade. And the good side is you can win big too. But I didn't want to take that chance. So you know what I did? I closed my position for a small loss. All right. It was at 8:29. I exit my position. I took like a 40-something loss. Then when it hit 8:30, jobs report hit. The U.S. had a bad, that was estimated to, I want to say it had 400K jobs created in, January, in December, but they didn't. They fell short of that. I want to say it only had 197,000 jobs created in December. So what happened was the CAD, the Canadian dollar, became stronger against the US dollar. So it went and it hit my targets. I took my hat off. I threw it. I said, man, I should have just stayed in the trade, man. I would have been up massively, man. I would have hit my targets. But then I was like, yeah, but you broke your rule, your trade rule. You ain't supposed to be even in the market on Friday. You know that. And you're not supposed to be trading during non-farm payroll. So it's like, yeah. So then guess what I did? I got greedy and I made profit. But to me, it's not good profit. So what did I do? Market went down, boom. All right. We teach people when it hits your extension level, you're really going to have a high probability of what we call a correction. Extension was hit, correction, retested market structure. As a trader, we know you retest market structure. We got in, I got back in short. I took out my standard lot size. I put my stop loss above the structure. I was good to go. Price came back down, hit my target again for a second retest. I made $480 within like an hour, I believe. And I was done for the day. Good profit. It's not all good profit. Here's why. I did that breaking my trade rules. You never want to make profit breaking your rules. Because what happened is you would get sloppy and then you would start breaking rules, and then it could be catastrophic if it goes wrong. So we want to win and lose based off of our trade plan to do it right. In this game, you can lose 8 times in a row if you do it correctly and had a right risk-reward ratio. You can lose 8 times in a row. And take 10 trades 8 times in a row, and in the next 2, you still be profitable. Let me repeat that. You can lose 80% of your trades and only win 20%, and you still can be profitable. That goes over a lot of people's heads. It's because as traders, we are taught to manage the risk. So we manage our risk that's real tight, but when our winners run, we let them run. And it makes up for anything that we have. There's a famous trader. I gotta go get his name. I always forget his name, but there's a famous trader in the 80s when he used to just trade Forex. He lost 90%. 90% of his trades he would lose. He only was a 10% guy, but he made over $400 million through the 80s. He was extremely impatient with his losers. He had real tight stop loss, so he had a lot of micro losses. But when those winners went, he did great. So remember, like I said, all profit ain't good profit. All losses aren't bad losses. Some losses are great, but you got to get to know yourself. You got to get out there and date this game, figure some things out, and you got to figure out what's for you. I'm not. Have I had a string or cluster of losses before trading? Yes, but as far as you would probably never hear me say that. I lose 80 to 90% of my trades and I'm still profitable. It'd be the reverse. I win 80% and still profitable, and 20% maybe some losses. But that's just my style. So his style, he's extremely impatient. I'm a little bit more patient, and I have better entry points that I look for. So the way I analyze is totally different. But you're not going to understand that until you get out here and date and get some things to figure out. It's certain things you like for your girl, your husband, or whoever, for them to do. Y'all all got what? Different love languages and all that stuff. You better find your financial language. Man, I might need to write a book on that. All right, y'all have a great one.